Hi folks, welcome back to the final video in our series. What we're going to do now is, you remember from our last final step, step 3 of the accounting process, we actually came up with balances for each of our asset, each of our liabilities, and each of our shareholders' equity accounts, and we put them down in the bottom here. These ending balances, instead of going directly to the balance sheet right now, we're going to show you a report that the accounting department would prepare, and the purpose of the report is to ensure that the total dollar value of all the debits and all the credits processed throughout the month of December are equal. Because if it's not the case that they're all equal, then that means we will not get a balance sheet that balances. So what the accountant does is they prepare something known as an unadjusted trial balance. At this point in our course, we'll simply refer to it as a trial balance. So what we're going to do is we're going to take each of these ending balances that we have here, and we're going to transfer them to what we call the unadjusted trial balance. All right, all we're going to do, and it's a report, and the report is done again to show us that the total dollar value of all debits and credits processed is equal. So let's begin to show you what that report looks like. And here it is. You can see in the trial balance, specifically unadjusted, and when you get into chapter 4, you'll see exactly why we say unadjusted, but in any case, it's a trial balance, and it shows or proves to us that the total dollar value of all the debits and the credits that we processed are equal. Now we know if we can get a balance sheet that's in balance based on the debits and credits we processed. So you remember, our cash had an ending balance of $18,900. We can go back to our T account where we posted all the entries to find that out. The next asset is supplies, and we should have on the unadjusted trial balance that our supplies is a balance of $900 debit. If we went back to our equipment balance, we can see it should have an ending balance of $600 from step 3, the summarization process, and in fact it does, $6,000. All right. You'll notice here, before I go on to the credit side, one thing I didn't mention is the 3-line title. While this is not a balance sheet, you'll see it's kind of similar. It's got the who, which is the company, the name of the report, which is an unadjusted trial balance, and at a date, because it's giving us balance sheet account balances at a date. So that first line and that third line is identical to the balance sheet, right? Because this is not a financial statement, it's a report, we just call it an unadjusted trial balance. But again, the unadjusted trial balance, or the trial balance as it's commonly called, is not a financial statement. It's just a report to prove that all dollar value of debits and credits processed throughout the month of December are equal. Now let's go back to our liabilities and shareholders' equity accounts. We saw the liabilities accounts payable had an ending balance of $800 and notes payable an ending balance of $15,000. So we've got those balances in there. Now we have to look at our contributed capital accounts, or shareholders' equity. Contributed capital is the only account with a balance, and it's $10,000. Retained earnings has no balance. We did nothing to affect retained earnings. We had no income that we told you about and no dividends that were declared. So nothing is happening in retained earnings. So we have a credit balance and contributed capital. So let's reflect that on the trial balance right here. Notice that with retained earnings, it has no balance, so I put 0 in there just to make sure you knew that. However, it is the case that if you have an account that does not have a balance, you can suppress or not include any 0 balance accounts. Similarly, on the balance sheet, we would normally not include 0 balance accounts, but just to demonstrate the process and that if that account had a balance, it would be there and where it would be, we want to show you this line. So if you add up all the debits and all the credits, we can see that we processed debits throughout December of $25,800 and credits throughout the process of $25,800. Now that we know the total dollar value of all the debits and credits processed is equal, we can see that down here. Now we can go ahead with greater confidence and prepare our balance sheet. So let's use what's in this unadjusted trial balance to do that. Okay, so now let's go to the balance sheet. This should look familiar to you. The who, the what, and the when, again at a date. We've got all of our assets, and remember, we're classifying the balance sheet now. We've got current and non-current assets. Liabilities, we've got current and non-current. Remember, the note payable was due in 2 years, so we wanted to see if you would remember that it's non-current. And then we've got our shareholders' equity. But let's go back to the top. We see assets. Again, we put them in order of liquidity. Cash goes first, supplies second. So we've got a total of current assets of $19,800, and you'll recall we're getting these two amounts here from our unadjusted trial balance. They're right there. We also see the value of our equipment. That's going to go in the non-current asset side at $6,000. So you'll notice that your total assets are equal to $25,800. Your total liabilities now are split between current and non-current. All right, and you'll notice here we've got current liabilities, only one account, $800. Now we opted to put this title here to total the current liabilities. And you don't necessarily need to do that if you've only got one account, but you do have to remember that's the only one you have, such that when you add it to your notes payable, which again are non-current because they're due in 2 years, that you're going to get $15,800 as your total liabilities. And again, we can see these numbers from our unadjusted trial balance. So now in the equity section, we are only going to have a balance for contributed capital, right? And retained earnings is 0. Again, you don't have to put the retained earnings in at 0 in this balance sheet because there has no balance. But because retained earnings normally shows up on a balance sheet, we will show it so that you don't forget to include it when it does have a balance. So you're going to get your total shareholders' equity, which adds up contributed capital and retained earnings of $10,000. So your total liabilities and your total shareholders' equity will give you total liabilities and shareholders' equity of $25,800, which equals total assets. So we know that our balance sheet is now in balance using all the balances that we had in the unadjusted trial balance, which was here. So this concludes our video on preparing the unadjusted trial balance from your step 3 process where you did the postings to summarize the transactions in T accounts, and then using the trial balance to prepare the balance sheet. I hope you found the video helpful.